Hi, Mathis Connor here with Connor Management Group, and this week we're going to look at a high-priced stock to consider selling. That's a stock you can either short or stock where you could possibly take some put option positions on. So the company this week, it's in the education and training services industry. Its 12-month downside potential we have calculated as 52.6%. That's negative 52.6% downside. Okay, and that was the teaser page, and on this page, as you see, the name of the company is the Apollo Group. Some of you may better know the Apollo Group through its large subsidiary, the University of Phoenix. The ticker symbol is APOL, Industry Education Training Services. Okay, quick look at the Apollo Group. As mentioned, its largest subsidiary is the University of Phoenix. They have campuses and learning centers in 40 states, Puerto Rico, Canada, the Netherlands, and Mexico, and they offer programs worldwide through the internet. The formal disclosure is Apollo Group, together with its subsidiaries, provides online and on-campus educational programs and services at the undergraduate, master's, and doctoral levels. The website address is www.apollogrp.edu. That's apollogrp.edu. The company's headquarters is in Phoenix, Arizona. They were founded in 1973. They have 44,000 employees. The sector they operate in is services industry, as already mentioned, education and training. The annual revenue for the last 12 months has been $3.7 billion. Definitely a nice little nickel there. Their net income has been $249 million for the last 12 months. And the cash from operations has been $478 million. The market capitalization is $3.1 billion. Here's their products and services page. There's not too much to show. As you can see, here's their corporate logo for the Apollo Group, some photos, a photo at graduation, the photo at a volunteer event, and another photo of the logo on the side of their building. Here you have pictures of the executive management team led by Dr. John G. Sperling. Okay, let's look at some of their metrics. As already mentioned, annual revenues at $3.7 billion. Their net income for the last 12 months is $249 million. And the operating margins for 2012 was 25%. For 2013, it's looking at 24%. That's somewhat flat, but the outlook is negative, and it's expected to decline a bit. The cash flow from operations, already mentioned, $478 million. So on to some of the evaluation metrics. The trailing PE for the Apollo Group right now is 12.4. The forward-looking PE ratio is 15.5. An increase in the forward PE ratio implies a contraction in projected earnings, which is, not a good thing. Not what you want to see as a long-term investor. The PEG, the PEG ratio, is at a negative 1.1, also implying a declining growth. The price to sales ratio is 0.9, price to book 2.9, and enterprise value to EBITDA 3.0. Those aren't necessarily particularly rich valuation numbers, but then again, the outlook is negative for their business. The recent closing price is at $27.30. The 52-week high has been $29.07, and the 52-week low has been $15.98. So the stock has been trading near its 52-week high, and just yesterday, the stock pulled back $1, even closer to its high. So the 20-day moving average is at $21.63. The 50-day moving average is at $20.52. And the 200-day moving average is even lower at $19.25. So when you have that relationship of the 20-day being higher than the 50 and that being higher than the 200, that's usually type of a bullish upward pattern in the stock price, and you think that maybe it's going to take off. But our analysis just shows that the stock is just simply overvalued, and it's frothy. We really don't understand why it had a recent jump in price. The average daily trading volume is 2.1 million shares. People are definitely trading this name, and they're aware of it. The beta for the company is at 1.22. So the company tends to move in tandem with the stock market. You know, a beta 1.0 would be a perfect alignment of movement. The dividend yield is 0%, so the average dividend payout ratio is also 0. This is a non-dividend paying stock. So here's the price chart for Apollo. As you can see, the company, you know, started at the beginning of the year back around $20, and it kind of bounced around. It got as high. It went up to around $22 in June, bounced down to around $18 or so in September. You know, just 2 weeks ago it was at about $21, and then in the past 2 weeks it just jumped up to the $28 range. We really don't know or quite understand for the jump. I mean, from what we can tell, it was just simply an earnings beat, and when you beat earnings, yeah, you know, people get optimistic and prices go up. But the story, its business story, has not changed that much, which is declining enrollment, cost-cutting measures, soft demand for the services. So let's taking a overall look at Apollo Group. The financial statement quality is good. I mean, it's solid. It's not great, but it's good. The profit margin trend / operating margin trend is flat with a declining outlook. The price pattern trend has been bullish, as we mentioned, but we just don't see it as being sustainable. And our model's overall market outlook continues to be bearish. There just seems to be, you know, an overexuberance of outlook right now, and you know, part of it is related to the federal government keeping bond prices, bond interest coupons low, and you know, pushing more people into stocks. But we still see it as being the market as being overvalued compared to historical norms. So back to Apollo Group, the recent closing price is $27.30. Our 12-month price target, TEMS, that's the model, at $12.95. So we see the 12-month potential of the stock potentially declining as much as 52.6%. You know, it is what it is. You know, we just based on the valuation ranges that this stock has been moving through, we don't see the story changing much anytime soon, and we just see it as going through an adjustment. And so it's an opportunity to short and make a profit on the stock, as well as possibly even take some put option positions. So on to Connor Management Group. If you haven't already signed up for our Saturday morning updates, please do. You could just go to www.gmcstockpicks.com and sign up, and you could be among the first to hear about great investment opportunities you won't hear anywhere else. And these opportunities are driven by using our own self-developed proprietary algorithms. We're new on the block, and we intend to show everyone just how good we are. Don't miss out. Please go sign up, and you can always unsubscribe with just one click. So that's all we have for this week, and see you next week. Take care.